So again, this is a webinar on the step-by-step guide on the PPP. And I'll email this slide deck to all of you after we're done. Okay. So Surin, our fabulous president, I'll let you take it away.
Great. Thank you, Jeff. Thanks everyone for being on this webinar for us. My name is Surin Nai, and I'm a family law attorney in Seattle, and also the president of the Asian Bar Association of Washington, which is the voice for the Asian Pacific American legal profession in Washington State. Our membership comprises of lawyers, judges, legal professionals, scholars, and law students, and our goal is to serve the needs of our membership and also promoting justice, equity, and opportunity for all Asian Pacific Americans. You can learn more about our organization at abaw.org. Thank you for attending, and I'll send it back to you, Jeff. Jeff, take it away.
Okay, thanks, Surin. Before we get started, and thank you all for joining us. Let's see, how many do we have? Oh, sorry, I just hit the wrong button here. Sorry about that. I'm just trying to see. So we have, oh, good, 15 people. So it looks like everyone's on. I want to make sure, sorry, can everyone see the PowerPoint? Can you see the PowerPoint?
Yes, we can. Thank you.
Great. Okay. So before we get started, I just want to say, everything that I'm presenting here, and including the ABAW, it's all informational. None of this is considered tax advice, legal advice, and none of this creates an attorney-client relationship either with me or with the ABAW. The other thing I want to point out too is all these rules related to the COVID-19 are changing. There's guidance coming out. I believe there's SBA, which is in charge of these loan programs, is going to issue guidance again in 4 days. So I expect to see some changes. Although I think for what we're doing here for the PPP calculations themselves, I think they're pretty much set. As far as I can tell, there were no changes here. I think the changes and the guidance coming out will deal more with the forgiveness side, which we're not going to cover too much here just because I don't know what the rules are for the forgiveness yet. So as we get going here, a couple housekeeping items. One, if you do have a question, there is a Q&A box at the bottom. So if I have a poorly drawn circle here showing you where you can enter your questions in. So the way the format will go in our agenda today will be, I'm first going to talk about a comparison of the two SBA loan programs under the CARES Act. I'll take your questions, some questions after that. Then we're going to do the step-by-step guide, and then take some questions there, and then also do some example applications here. Just on some 3 case studies here of maybe some relatively simple applications of how to determine your PPP loan calculation. So that'll be our agenda for today. Feel free to type into the Q&A box your questions. I'll get to them. And of course, at the end, I don't expect to go the full 90 minutes. Whatever's time left over, I will answer as many questions as you have. Okay, thanks. So to get started, what we first have, the CARES Act. The CARES Act went into effect on March 27, 2020. It did many things like covered unemployment, but which we won't talk about today. I'm going to focus on 2 programs. One, the CARES Act created the Paycheck Protection Program, and it expanded an existing loan program called the Economic Injury Disaster Loan. The Paycheck Protection Program, I call it the PPP, and as most of you are very familiar with it. And then the other program is called, I call it the EIDL. Now, going back to the PPP, there was an initial $350 billion for the program, but it went fast and it pretty much was exhausted within a week or 2. The new funding, which is $310 billion, actually is not pending anymore. I should have changed that, sorry. It actually will be available starting on Monday. So hopefully all of you are getting ready to apply for the PPP. And I know that's why you're here. So hopefully what we're going to talk about today is helpful. So let's first go into the comparison of the EIDL and the PPP, just so you understand what's going on. So who is the lender for the EIDL? It's the Small Business Administration. So the SBA is the one that's going to be giving out the loan, going to be producing the loan documents, and you'll be making payments if you get the EIDL to the SBA. For the PPP, it's actually a bank or some sort of non-bank lender. And the bank could be your business account, where you have a business account, maybe where you have a credit line. And then if you don't have a business account, it's maybe your personal account, where you have your personal bank accounts. But the problem is, most banks will require you to have some sort of business lending relationship. And you can't just have one now. So I've gone through all these applications. I've applied, I tried going through 4 banks before I found one for the PPP. I applied for the EIDL, I applied for grants, so I'm very familiar with the process. And one of the things I tried to do was open a business bank account at another bank. That didn't work. Usually they want your bank account open before February 15th, 2020. So it might be too late. So one of the things that was a nice development was that these non-banks started accepting applications. PayPal, Intuit, and Square. Square is the credit card processing company. And the materials that I have for you here will be sent to you by email after we're done. So, and then the PDFs of the materials will have links that you can click on. You can also just Google it yourself and just do PayPal PPP, and then you'll find it. So you might have better luck with some of these non-banks, and you want to get those applications in first. So, and as many of you may have heard or not, people already had submitted applications to whether it's to their bank or through PayPal, and those lenders are going to process those applications first. So it is good that you get yours in as soon as you can, so that you can get into that pipeline. 310 billion will go fast. Oh, the other thing I should mention, of the 310 billion, 60 billion is being allocated to small banks such as credit unions, with the purpose of helping very small businesses or businesses owned by persons of color. And so that's the purpose of the 60 billion going to those banks. I don't know who those banks are, and I don't know when we'll find out when they'll have those funds available. So who can apply? So for the EIDL, it's any business, for-profit business, or actually any business that has 500 or less employees, sole proprietors, independent contractors, and nonprofits. For the PPP, it's pretty much the same, except it's the same as the EIDL qualification, except you've had to be in business or in operation by February 15th, 2020. So how about, is there an impact on your credit report? For the EIDL, yes, the SBA may initiate a hard inquiry on your credit report. So what that means is, if there's a hard inquiry, your credit scores will be reduced. And from what I read, the credit inquiry will be on an Experian credit report. And my personal opinion is, I don't think it's worth it to get an EIDL loan unless you really have a need for it, which we'll cover a little bit later. For the PPP, no, banks will not check your credit. It is not based on a credit check. They'll ask for your social security number, but there is no credit check whatsoever. They only base it on what we're going to cover today, payroll costs, which we'll get into. But I guess the only way it'll impact your credit is if you default on the terms of this PPP program. So what can you use the loan for? For the EIDL, it's financial obligations and operating expenses of your business or nonprofit. I'll cover the last 2 points in a minute here, but first I want to jump over to the PPP. So the PPP, what you can do is cover basically 5 categories. You can use the PPP loans for these 5 categories: salary, wages, self-employed income, anything that's similar to compensation, right? That's actually stated in the CARES Act, similar to compensation. So it could be like ownership draw. Health insurance premiums, payments of interest on mortgage obligations, right? So in other words, you can't prepay your principal. You know, if you get $100,000 PPP loan, you can't just take it and prepay your principal on your mortgage. You can't do that. And this is not your home mortgage, but your mortgage on, let's say, business property. You can also use it to pay rent and utilities for your business. Now let's go back to the EIDL and those last 2 points on the left side there. If you get both an EIDL loan and a PPP loan, you cannot use your EIDL loan to pay for any of the 5 categories under the PPP. So you cannot use your EIDL to pay salaries, premiums on health insurance. interest, rent, or utilities. However, after your PPP loan is done, then you can use your EIDL loan to pay for those expenses, because once the PPP loan is done, you're not obligated to those terms anymore. So that's one thing to keep in mind if you're going to do both. Is the loan forgivable? EIDL, no. Very easy. That's a quick answer. For the PPP, a little bit more complicated. So the loan is forgivable. Problem is, we have these general rules, but there's so many questions that we don't know how these rules will be implemented. So the SBA, the Small Business Administration, is supposed to issue guidance on these rules about, well, sometime, well, supposed to be this past week. That didn't happen. So hopefully it comes out this week. And the reason why it's a concern is, we'll cover that a little bit later, you have an 8-week time period to spend these loans in order to qualify for forgiveness. Some people received their loan 2 weeks ago. So now they only have 6 weeks left without knowing how they're supposed to spend the money. So something to keep in mind in terms of timing. Okay? But the main rules in terms of forgiveness are 75% of your PPP loan has to be used on payroll costs. So let's go back a couple slides. Payroll costs, again, are on the right side here. Permitted costs, you know, the 5 categories I talked about: salaries, premiums, health insurance. Okay, you have to spend at least 75% on payroll costs. Sorry, that excludes the rent and utilities. We're talking about salaries, wages, health insurance. So 75% has to be spent at least on salaries, wages. I forgot to include, I'm sorry about this, retirement contributions too. Retirement contributions can be spent. Your PPP loan can go to that as well too. So 75% again has to go to those items called payroll costs. The rent, utilities, interest on mortgage, they're considered non-payroll costs. So no more than 25% can be spent on rent, utilities, and interest on mortgages. The other second rule is you have to maintain employee headcount. It means you have to keep the same amount of employees, on average number of employees, employed for the 8-week period that you have the PPP loan. I'm not going to go into the calculations and everything, but it's basically there are 2 time periods you're supposed to compare to when you had employees. It's stated there in the slide, which you can go over later. But just the point is you're supposed to maintain your employee headcount. The other last rule, this is where it gets a little bit dicey in terms of why we need some guidance, is you can't reduce compensation of any employee making $100,000 or less by more than 25%. So what that means is, if you are paying an employee $10,000, you cannot reduce that employee's salary to no lower than, or if you reduce the employee's salary to $7,500, then you'll lose some of your PPP loan forgiveness. Okay, so that's something to keep in mind. We'll go into a little bit more why there's some confusion there, because it sounds simple, right? You know, just make sure you don't reduce the salary down to $7,500 for someone making $10,000. It gets a little bit more complicated, and we'll discuss that. How much can you get for the EIDL loan? There's a $2 million max, but up to $200,000 you're supposed to get it without any type of personal guarantee. The only issue is, and this makes sense, you have to actually provide some collateral in your business assets. So if your business owns a building, that will have to be the collateral. For service-based businesses where you don't really have any assets, I'm not sure what kind of collateral you'd have to give, and I don't even know if we could qualify. I'm like, for me, I'm an attorney, so I don't have physical assets. I don't have machinery, so I don't know, if they would even give me a loan for up to $200,000 if I don't have any collateral. And as I mentioned earlier, you can't use it to pay for the same expenses covered under the PPP. Now, for the PPP, it's a little bit more complicated. There's a formula, right? And it's basically 2.5 times your payroll costs. And remember, I mentioned your payroll, and we'll define what payroll costs are, because there's a specific way to define that. And we briefly covered that. I briefly mentioned it earlier, but we'll have a little bit more, make it a little bit clearer. The other thing you have to do is, when. So at what time period do you determine these payroll costs, right? So let's assume you have wages paid, right, for either 2019 or some other time period. And what do you use? Which wages do you use to determine your payroll costs? There are 2 time periods. One is 2019 that you can use, or the 12 months prior to your application. So in other words, you can just use your wages paid for, or your payroll costs from 2019, or the payroll costs from the 12 months prior to your application. And we'll go over later on about what records you'll need to prove your payroll costs. Now, if you're not in business, if you weren't in business between February 15th, 2019 to June 30th, 2019, then you have to use the time period between January 1st, 2020 to February 29th, 2020. So what do payroll costs include? Payroll costs include compensation, so salary, wage, self-employment income. So I want to stress that it's not just payroll, right? Even though they call it payroll costs, self-employment income, meaning if you just are in your, you have your own business, then you may only have self-employment income. That it's included in your compensation. And we'll go over an example for someone that has self-employment income. Payment for vacation, leave, sick leave, except for leave that's provided under a special federal law that was enacted during for this coronavirus outbreak. Right? So that's a special type of leave you don't get credit for here. Severance pay is the third category. Payment for health insurance, retirement benefits, state and local tax. So I know there's some people here who are in other states. I think I saw Chicago, California, and possibly New York or New Jersey as well. So you have to include, just like Washington State, I'm assuming you have unemployment and workers' comp. So those would be included in your payroll costs as well. The last item there is the employee share of federal employment tax. So let's go back to that example. Remember I mentioned when you pay an employee $10,000, right? Well, when you pay the employee a gross of $10,000, the employee will take home a net of $8,000. These aren't the actual figures. I'm just giving you an example. So the employee will actually take home $8,000 of that $10,000. $2,000 of that $10,000 goes to the IRS. And that's the share that you as the employer have withheld from the employee's paycheck to pay for like Social Security, income tax, whatever. So again, $10,000 gross pay, $8,000 goes to the employee, $2,000 goes to the IRS. Under the CARES Act, that $2,000 is supposed to be included in your payroll costs. So be careful, because some banks will say, no, you are only allowed to include $8,000 net, right? So again, instead of saying $10,000 for the employee, your bank or your lender might say, no, it's only $8,000, which is incorrect, because it's not fair. Think about it this way. The federal government, the CARES Act, is trying to give you $10,000 to pay the employee. But if in the end you only get $8,000, that means you are paying that extra $2,000 of federal employment tax for your employee out of your own pocket. Right? And that's not the intent of the act. And in fact, that is what the SBA has said, that you should be getting $10,000 so that there's money for you to pay, so that you don't have to pay the employee's share of federal employment tax. So let's go to the next one. Now, what do payroll costs exclude? It excludes any monetary compensation exceeding $100,000. Okay, so that means if you have an employee that makes $150,000, that $50,000 that exceeds is excluded from payroll costs. That means you can only go up to $100,000. Now, the other thing that's excluded is the employers in the employer. So your share. So if you're the employer, your share of the federal employment tax. Continuing on with that example of the $10,000 to the employee, when you pay that employee, right? Remember, I mentioned you have $8,000 goes to the employee, right? That's what goes into the employee's pocket. $2,000 goes to the IRS of that $10,000 of the employee share of the employment tax. You have to pay an additional $1,000, let's say, for your share of the employer taxes. Right? That's what you are obligated. So really, when you pay an employee $10,000, you're really paying $11,000. That extra $1,000 is just what you have to pay towards the IRS. And in this case here, it is not included as part of the employer taxes. The payroll taxes. So what that means is, you're only getting a PPP loan to cover you for $10,000 of that employee's paycheck. You have to cover that extra $1,000 on your own. The other thing payroll costs exclude are compensation of employees who live outside the U.S. So just to make it clear, that this doesn't matter about citizenship. It's just employees who live outside the U.S. As far as I know, this came up in our last webinar, the CARES Act and banks aren't asking about citizenship, of employees, right? It's just asking you who lives outside the U.S. And as far as I know, they're not even checking, but you should definitely be truthful because these are, federal applications and you don't want to commit any kind of perjury or lie on them. And then, as I mentioned before, the leave that's provided under that special Coronavirus Act is excluded. All right. Continuing on with how much you can get, right? The EIDL also has this other aspect to it, right? And when it first came out, it was publicized that anyone who applied for the EIDL, you would just get a $10,000 grant. It's considered an advance, but it's a grant that you would not have to repay at all. It would just be a straight up $10,000. But about a week or 2 weeks into the actual program, the SBA came out and said, no, we can't do that. Instead, we're changing the rules so that it's $1,000 per employee owner up to a $10,000 max. So for example, if you have 2 employees and you're the owner of the business, you will only get a $3,000 EIDL grant. Right? If it's just 2 owners of a business, no employees, you will only get a $2,000 EIDL grant. The benefit of this grant is you don't have to repay it at all. Even if you apply for the EIDL loan and get denied, you get to keep that money. But there is an issue with that. And the issue is, if you get a PPP loan as well as this EIDL grant or advance, the amount of the EIDL advance will reduce your PPP loan forgiveness amount. So here's an example. Let's say you get a $30,000 PPP loan and you also get a $10,000 EIDL advance. Well, that $10,000 advance reduces the amount of your PPP loan forgiveness by $10,000, and you only have a $20,000 max PPP loan forgiveness. So in the end, you will have to pay back that $10,000 advance under the terms of the PPP loan. So be careful if you get that EIDL grant or ask for it. Some people may have already done it because maybe you already applied for it. Like me, I applied for it once I heard about it because I said, $10,000, why not? But I didn't know after the fact that they were going to limit it. So that's the other reason why I don't think it's worth it to apply for the EIDL, because you are going to get a credit check. And if there's only 1 or 2 owners of your business, you're getting $2,000 for a credit check, and that's going to reduce your credit score. So I would only get the EIDL if you really need to pay for capital expenses or operating expenses after your PPP loan is done. Otherwise, it may not be really worth it. So what are the terms of the loan and the interest rates? For the EIDL, the term is 30 years. The interest rates are there. I won't go through it, but the first payment is due 12 months after the loan date. Okay, so not bad for interest rates. I think I saw home equity lines are at like 3.34. So the home equity line, of course, you have to put up your house. So something to consider if you want to do the EIDL. For the PPP, the term is for 2 years for the unforgiven portion of the loan or for the amount you don't repay to the bank. At a 1% annual interest, it was 0.5%, but the banks asked for it to be raised to 1%. And then the first payment is due within 6 months. Now, going back to that example, remember I mentioned here, if you get an EIDL loan, right, that $10,000 advance reduces your max forgiveness. So if you get the EIDL loan, you only have a $20,000 max loan forgiveness. That $10,000 EIDL advance would have to be paid back over 2 years at 1% interest. And that's the impact of getting the EIDL loan, or advance, excuse me, EIDL advance. You would have to pay back, and getting a PPP loan, you'd have to pay back the advance over 2 years at 1%. It doesn't matter how you spend it, you're gonna have to pay it back. So think about that before you apply for the advance if you haven't done so already. All right, so let's go and look at some questions. Are there any? Oh, we have no questions. Any questions? You sure? Not even the chat box? Let me see here. No, I don't see anything here. Oh, here they come. Thank you. So you feel free to type in the questions as I go along. You don't need to wait. All right, and then I'll read them out just because I don't want to do that. If you exhausted the PPP, then use the EI for payroll. Can the no, the EIDL can never be forgiven at all. It's if you get the PPP, use the funds for what's required under the PPP, get it forgiven, and then afterwards you use the EIDL, it will never be forgiven. It's a separate loan program. If I don't answer your question, feel free to answer it again. I ask it again. Does the PPP check credit? No, there is no credit check whatsoever. They'll ask for your social security number. We'll go over the application, but there is no credit check whatsoever. All right. Okay. So, oh, there's a chat here. What's this one? Do you have to keep the newly opened accounts to use the PPP loan? I think you're asking, Mona, if let's say you get the PPP loan, you know, do you have to keep the account where the money's open, or the account where the money goes into? Normally, what happens is, I probably still not heard anything. Okay, sorry. Let me first take care of Mona's question here. Do you have to keep the bank account open? So what normally happens when you get the PPP loan, actually, let me do this. So normally when you get the PPP loan, what happens is the bank, the lender will actually deposit it into whatever bank account you have already. So there won't be a new account open. I have some tips later on that maybe you should put it into a separate account, but you don't have to keep that account open. So in other words, I tell some people to take the PPP loan funds, put it into a separate bank account, even at the same bank, makes it easier to track for loan forgiveness purposes, but you don't have to keep that account open, and you don't have to open up a new account. You could just take the funds, put it in your regular account, so long as you're able to track the funds and the use of it. And then Commissioner Jeske here, I don't know if that's still how I should refer to you. I applied for the PPP, but still have not heard anything. So here's where you need to be persistent. Wherever you applied from, go check with them, because Monday, the banks are supposed to be opening up again and processing all the applications that are in the pipeline. So whatever bank you went through, I would contact them and say, where is my status? Where is my application? And push them. But Monday is when they're supposed to start again, okay? And hopefully you hear something. And then I would just keep pushing them. I mean, they're probably going to get flooded with calls on Monday. But if you have been talking to a banker, I would do that. A friend of mine also is in the same position you are, where she didn't hear anything after she applied. Nothing. It was just silence. And then they kept telling her, oh, yeah, you forgot this document. You forgot this document. She had to keep signing new notes and all these other promissory notes. So she finally just called someone, and they got a little frustrated with her. But within 20 minutes, she got an email saying, here's where your application is. So I know it's the weekend. You might not be able to get in touch with them, but even try today if they're open. Let's see, Mona, what are the document requirements for tracking the use of funds? We're going to get into that. Oh, what are the document requirements? Yeah, I see that, Kelly. I will answer that one too. Some people are using the chat. Some people are using the Q&A. So I'm bouncing back and forth here. Mona, the SBA has not announced yet what you're supposed to do to track the requirements, but I'll talk about it when we get there, just briefly about the document requirements. And I think it'll help once you kind of know what you're supposed to spend it on. And again, remember, you're supposed to spend it on payroll costs, right? So go back and look at my slides about payroll costs. That's salary, wages, retirement benefits, health insurance premiums, rent, and utilities. So you're basically just documenting expenses and how you used it. Okay, but wait, the SBA will issue some guidance. So Kelly, let's see, I had a bank tell me submit the application to them without having. It depends on the bank. So Kelly's question is, or Kelly's comment is, someone told her, someone told her that you could apply even without having an account before February 17th. It depends on the bank. I guess what I said earlier was some banks are saying you can't apply unless you have a business account with us before February 15th. For example, BECU was saying that initially. BECU, for those who don't know, is a regional credit union here. So I'm sorry for those people who are out of state, out of Washington State. But that's what they said. And I don't know if that's true now, but it depends on the bank. I will say my experience is that bank employees don't really know what's going on, just because it's a whole different department that's handling it. So whatever bank you went to, go online. They should have something up telling you what's going on in terms of their requirements. Okay. But let's see here. I applied for PPP and they checked my credit, used PayPal. That does not sound right. There's not supposed to be a credit check with the PPP. And I haven't heard that before, that PPP, that PayPal was checking credit. That's the first I've heard of that. So, and Mona, thank you for the tip there. So for anyone's having trouble, you know, so one person mentioned that that PayPal did check credit. They're not supposed to, and I haven't heard that before. So, but again, like I said, a lot of this is controlled by banks and the lenders, and it's different for everybody. So I haven't heard anyone have experience with Square. I heard a lot of people have experience with PayPal, and what I've heard through PayPal is that within like 24 hours, some people got their loan approved. This was during the first round, loan approved and processed in their funds. Okay, so I'm going to head back into the presentation now, and we're going to start covering the step-by-step. What was the question that I want to come back to again? Sorry, it was, the requirements. So I think that was from Mona. Mona, if I forget, please put it either in the chat or the Q&A, and I have the slide right here which shows the Q&A. Okay, so but either way, I'll figure it out. Okay. So let's continue on. So tips for the PPP, and these tips, most of them are for anywhere, wherever you are, whatever state you're in, they should apply. The only difference will be how you find your documents, and that will be state by state. But we'll get there. Okay. So I covered some of this just now in the questions. Find a PPP lender, you know, and we talked about either your bank, right, or a non-bank. My greatest challenge, like I said, I think in the beginning, I tried looking at 4 different banks before I found my bank finally opened up the application window. All 4 of them wanted different requirements. Remember I mentioned about the gross wage versus net wage, right? Where one bank told me for a $10,000 employee, I had to put 8,000 only. Another bank says, no, I can do 10. Another bank said I could do the full 11,000, that they would cover my employment taxes. So every bank might have different requirements. Okay, and actually I'll show you what one bank is actually asking for in terms of an application. So so this will be the hardest part, I honestly believe, unless you have really complicated payroll situations. But again, I think finding the bank will be the hardest part if you don't have like an established relationship with the bank. Step 2. So we're going to do sample case studies, but you're going to have to fill out a PPP application form. I'll briefly show you what it looks like. And this is what the current, I think this is the current one. This was from April 20th, the version of the application form. And just to give you an idea right here, you would have to fill out, it's not that long. It's about 2 pages. It is 2 pages. So you would have to say what type of entity you are, fill in your business information. We'll get into this with this average monthly payroll. That relates to what I was talking about for payroll costs. And then right here, you have to say what you're going to use it for. Remember, I mentioned what are your permitted costs that you can use it for. And that's what generally these categories are: payroll, lease, utilities, or other. Your ownership information as well too. So one question that comes up here is, what about nonprofits? Because nonprofits have no owners. So what do you put down as an owner? And I recommend you at least put your officers down, not your entire board. The reason why is your officers, you want to pick people who are authorized to sign documents, loan documents on behalf of the organization. The other issue is the requirement to have an SSN here. And if you have 15 board members, I don't think you want all 15 board members to list their social security number. If you have an ED, an executive director, I would also list the executive director in addition to the officer. For the address, I would not put your personal address. This is for everybody, anyone for that matter, If you have a business address, I would put your business address. Even though, this isn't public information, you just never know. And I would use a business address. All of these applications are handled electronically. I have not heard of anyone turning in a hard copy application. All of these are digitally done. You e-sign everything too. Even for that person who went through PayPal, I'm assuming that it was all just uploads of documents, which we'll get into as well. I won't go through the rest of the questions here, but they just go through some certifications you have to make. One thing I do want to point out is this question here, let me move it up here. Has the applicant received an EIDL loan? That doesn't mean you can't get one. It just, they just want to know if you got one because you have some options if you do. Also too, if you get the EIDL advance, this is something, actually I should show you. That's up here where you have to explain right here what you got as an advance right here. Or actually, I'm sorry, right here is where you have to input it. But when we do the case study, the spreadsheet, we'll have an example of how that's done. And then the last thing are just additional questions, qualification questions. And the second page, just all the certifications that just restate what's in the CARES Act. And then you would have to sign it. Now, some banks, you should prepare this, but some banks will just have their own form that you fill out online. Like my bank, I just did this all online, even though I had one prepared. The other thing, this is just a tip that I give to everybody. All this information, at least right here, and then maybe right here, your ownership information, and then information about your business. I would type it into some sort of Word document or something that you can save, because chances are you're going to be applying for other applications or loans, grants, and they usually will ask for this. It's easier to copy and paste and have to just retype everything over again. So that's just one tip that's helped me save some time. All right, so let's go back to the slide. The other thing that we'll go over too, I'm giving you links to 2 PPP loan calculators that were produced by the Association of International CPAs. So it's an accountant organization that produced some pretty good PPP loan calculators that of all the ones I've seen, I think it's the best one. And we're going to go over that when we're going to use them. I'll use them when we do the case studies. All right, so now we're halfway through. So we're at step 3. Step 3, this list right here of documents that you need to gather, and this is what I've just seen from the 4 or 5 banks and from what other information people have shared with me. For corporation, nonprofit corporation, that includes professional corporations. So in Washington State, an attorney, accountant can be a PC or PS. I can't remember what the designation is. And in this case here, you would have to get your articles of incorporation. Now, your articles of incorporation, those are documents filed with the Secretary of State. For those people who are out of state, I'm assuming it's the same thing. And we'll go over how to, we won't go over it, but I have directions of how to get it. But that document is available with the Secretary of State. It was filed to form your actual corporation or nonprofit. The annual report, that's just an annual registration listing who your board members and your officers are. Again, that's with the Secretary of State and available online. For people out of Washington State, I'm assuming it's there too, or something similar like an annual report is there. Bylaws, now bylaws are not filed with the Secretary of State. These are internal documents that you have that say how you're supposed to make rules within your, make decisions within your organization. And so those aren't filed. If you don't have a set of bylaws, they're relatively easy to get. If you're a really small nonprofit or small business, there's an organization here in Washington State called Communities Rise, which can provide assistance with getting bylaws if you need it. The other documents you need are business licenses. So that's state or city business licenses. Now, for some people, you can't go back into your office or into your store or your shop because of stay-at-home orders. You can't get your license. So most of the times you can get proof of one online, and that's what I did because I can't go into my office other than maybe check some mail. The other document you might need that you should have ready is an EIN letter from the IRS. Now, an EIN letter, that's your tax identification number that the IRS gave you to open a bank account. You might not have that. If you don't, at least have your EIN because the banks will require that. That has to be at minimum. I don't think you need the EIN letter For nonprofits, you should get your board members to sign a consent allowing the officers or the ED to sign the loan documents on behalf of the organization. And of course, the bank or your lender may require additional documents. For LLCs, now in Washington State, you might have a PLLC. I know in California, for example, you can't have a PLLC. I can't remember how like law firms or accountants can be operated, but these are LLCs or PLLCs. In Washington State, again, you have a certificate of formation, which is filed with the Secretary of State. Outside of Washington State, they might be called articles of organization. And these are this document here would have been filed with your Secretary of State to form the LLC or PLLC. Right? And then the annual report too, like I mentioned before, is just the annual registration, again filed with the Secretary of State. For an LLC or PLLC, you'll likely have something called an operating agreement or LLC agreement. You may have needed this when you opened a bank account. Banks usually want it. If you're like a single member LLC, usually you don't need one because it's supposed to establish rules of how you make decisions. Well, if you're the only owner, you don't really need any rules. But if you have if you have another owner, then you probably have one for a partnership agreement almost. That's what it serves as. So you'll likely need one here because because lenders, they just want to see it. Business licenses, I covered that. The tax ID, I covered that as well too earlier in the previous slide. And then of course the banks may require. I'm a PLLC myself, and this is all I needed to provide the bank. So for step 3, for sole proprietor, so if you don't have any type of entity, for example, you're just a consultant and you never formed a corporation or an LLC, you won't have anything filed with the state other than your business license. You might have an EIN letter too. If not, you probably are operating under your own social security number. That's totally fine too. Because remember, sole proprietors who are self-employed can also apply for the PPP loan. There's a little bit of, we'll go over a nuance when it comes to loan forgiveness for those who are sole proprietors when we go through the case study. And then step 4, I won't go through all of these documents, but remember earlier, and Mona, I think this was, well, actually, this doesn't address your question, Mona, yet. This is just for the loan calculator, for your application. I mean, you need to gather all your payroll records, especially if you're a corporation, nonprofit, or LLC. You need to show that whatever you're reporting as your wages for 2019 is backed up by your records, and those records will be your employment tax returns. Those are called IRS Form 941s for 2019, or whatever 12-month period you are applying under. Because remember, on the PPP, you can apply under 2019, or you can use the past 12 months to determine your loan amount. Payroll reports as well too, they may require, and we'll go over how self-employed people or people don't have employees next. Healthcare costs, right? So your insurance premiums, retirement plans. Now, you may have a payroll service such as Gusto or ADP, and that service may actually give you and produce a PPP payroll cost summary for you. Be careful about using that summary because you don't know how they determine your payroll costs. So I would always just try to verify to make sure it's correct. Some lenders are asking for leases or mortgage statements, but you don't really need that. You just need to prove your payroll costs for purposes of determining your PPP loan amount. But it still might happen if you have a lease or a mortgage for your business. Now, for self-employed people, what you need to produce is a 2019 Schedule C. So even if you haven't filed your 2019 return, which is fine, you don't have to file it, but the SBA and your bank will require that you have a Schedule C prepared, and we'll go over one during a case study. And your 2019 Schedule C will be based on your profit and loss for 2019. And your profit and loss is what you got as a gross receipt minus all what you got in gross from all your clients' customers minus your expenses, and then you'll get a net income. And that's what the SBA and your lender wants to see. You'll also need all your 1099s, bank statements, and probably your 2020 bank statements or business license just to show you're in business. If you're a sole proprietor or self-employed and you had employees, you'll need to provide the same employment documents in the previous slide that I mentioned. So Step 5, you've gathered all your documents. I should also mention too, remember, you should have all these documents in PDF form because you're going to have to upload them, right? So either if you have a hard copy of them, you need to scan them into PDFs, or if you have them just available somewhere, make sure you have them in a folder ready to go. And the only thing that will stall your application is if you don't get the documents the banks, the lender is requiring. So make sure you get it, you have them available and ready to go. So let's say everything's done. You find the lender, right, which is the hard part. You upload everything, you get everything done, and you get your payroll calculator done. Well, now you hurry up and wait. That's basically what's happening now. You rush, and then you upload it, and now you're just waiting. And you know, for me, it took about a week or so until I actually heard that the loan was being processed. And the process and the steps that I had to go through, my lender thankfully gave me updates about where I was at. But the bank will approve, then the bank sends it to the SBA for approval. Then you'll get loan documents likely to e-sign. And then within signing of loan documents, you'll get your funds deposited into your whatever bank account that you are telling the lender to deposit into within 10 days. So what I recommend is being patient but persistent. It's just, as I mentioned earlier, my friend who was figuring out what happened to her loan, it was just hounding and calling the banks to find out where it's at. And then, you know, she finally got an answer. So I definitely can understand some of the angst because once you send it, you don't know what's going on. And my experience also has been a lot of the time, most of the banks aren't checking your numbers. If everything looks good and they won't go through and dot every I or cross every T, they're just going to look at what's going on. And in fact, the guidance from the Department of the Treasury tells banks that they don't need to verify everything, that they can rely on the representation of the borrower. Now, don't go and lie. Don't go and you know, inflate your numbers. In fact, that might not help you, which we'll go into as well. So you have to be truthful because these are all federal loan documents. And if there's some sort of misrepresentation or something that you lie, or you have to be careful with. Now, if you make a mistake, that's the other thing that could happen is I made a mistake on my loan, not in a way where where I made some misrepresentation. I actually shortchanged myself in my PPP loan, and that was my fault because I made an error in calculating something. It was too late. Once I submitted it, the bank took it. I could not change it at all, and I just I had to live with it, with shortchanging myself a bit. So whatever you do, you make sure you check it. I know we're all in a rush to get it in. Just make sure you check it because once it's submitted, there is no correcting it. I should mention one other thing. Going back to the EIDL loan, if you already applied for the EIDL loan and you're waiting to hear, one of the other questions that came up in the seminar, and one thing that I'm trying to figure out is if I can withdraw my application for the EIDL so I don't get that credit hit. I don't get that hard inquiry. I have yet to find a way to withdraw my EIDL application. So if you've already done it, you can try to call the number for the SBA. But from what I've been told, no one knows really how to withdraw it. And if that's the case, then we're just kind of stuck. So after you apply, you get your money, it gets deposited into your business bank account. Now what? Well, the 8-week window for your loan forgiveness starts on the date you first get the disbursement. So under the PPP rules, the amount of the loan that you get from the PPP can be forgiven so long as within the 8 week from the disbursement, you use it. Remember I said earlier, there were 3 rules. Set at least 75% on payroll costs. What was the other? Oh, maintaining your head count, right, for the 8-week period. And then you can't reduce salary for employees by no more than 25%. So here are some of the issues that we need SBA guidance for, and no one really knows. If you went online and searched SBA loan forgiveness rules, you'll get 500 results, 500 different answers. So one of the issues that comes up is what happens when an employee doesn't want to come back because that employee is earning more on unemployment with the extra $600 under the CARES Act. What do you do then? Because the PPP loan says you need to maintain employee headcount. Does that mean you need to rehire everybody? If let's say you laid off people, right? And if they don't want to come back, are you now going to be out of your PPP PPP loan. The CARES Act doesn't address that. So what I've been telling people is, that doesn't make sense to me. You would lose out. It's not your fault as the employer that your employees don't want to come back. So what I would do is document your attempt to say, hey, I tried hiring back my employee. They said no. And now I'm going to hire someone else to take their place, just so that you can qualify for the PPP loan, right? Another person asked me, well, can I just pay myself, put myself on payroll? I don't think you can, and I don't think that will solve the problem. It might, again, we don't know because the SBA loan, but the SBA rules aren't out. That's one issue too that we don't know. Another issue that comes up is when we determine that, remember I mentioned you can't reduce an employee's salary by more than 25% compared to what was paid in Q1 2020. So that's January 1st, 2020 through March 31st, 2020. So one issue is between that time period in 2020, like that first quarter, that's 13 weeks, right? But we have an 8-week window here to use the funds. As far as I know, 13 weeks, 8 weeks doesn't equal up. So I think there has to be some guidance there, because are you supposed to pay 13 weeks of wages in 8 weeks? That doesn't quite make sense to me and a lot of other people. The other issue that comes up, just for for the forgiveness, is what about people who make more than $100,000, right? The CARES Act says you're supposed to exclude them. So what some people are saying is anyone who makes over $100,000, basically you cannot pay any of the PPP funds to them. That's what some people are saying. You can only pay PPP payroll for people who make less than $100,000. I don't know if that doesn't really make sense to me, but other people are saying that you can pay people with the PPP funds up to $100,000. So there's a question there. What do we do with people who make more than $100,000 annual salary? So we're not talking about $100,000 during during the 8-week period. That's another question. Sorry, I'm going through all these questions because these are things that you need to think about if you're going to get the PPP loan. The other issue is, for that 25% reduction, is it based on total payroll or by employee? If it's based on total payroll, that makes things a lot easier, because you could say, oh, okay, as long as my total payroll doesn't dip, I don't reduce total payroll by 25%, I'm good. But other people were saying it's by employee. So if you have 400 employees, you have to monitor each wage for each employee. And that's a lot of work to do. In my opinion, I think you have to monitor and compare each wage for each employee. Which also brings up the other question is, what if some of those employees don't come back? What do you do? So as you can see, we're waiting for more guidance. Mona, your other question that you're saying is what kind of documentation? So the documentation you would need to keep is just like doing regular bookkeeping. And that would be your payroll records of what you're paying during this 8-week window, your rent, utilities, and you have to show, remember I talked about all these rules, you have to show that the payments were made within these bounds. Hopefully me telling you these rules, you're not saying, oh, forget it, I'm not going to apply for the PPP, okay? I still think it's worth it to apply. You don't have to take the money, right? Because it is free if you can stick within the rules, okay? So that is, before we go into the actual case studies, I'll take some questions now. So I'll go to the chat box too. Let me open that up, sorry. Stop share here. Chat box. Oh, down here. Sorry. Okay. Sorry, I answered this. Proof of income. So you may again, but regarding proof of income, and I'll get to the chat questions too. But regarding proof of income, what can you show if you have not done your 2000? Okay. I don't know if I answered that question already, but it would be, oh, wait a minute. If you have a 2-person LLC, there are special rules for that. You would be showing your profit and loss for 2019. You would not be considered self-employed. If you have 2 owners of a PLLC who take draws, it would be your draw. So that brings up a question that came up right before when the CARES Act is, well, you say compensation is an ownership draw. So for those people who aren't sure what I'm talking about is, if you're owner of a company and you have no employees whatsoever, and you make $10,000 at the end of January, and you just take that $10,000 for yourself, right? Or $5,000 each for each owner. Is that considered compensation? In my interpretation of the CARES Act, I think it is. Because the CARES Act says it's wages, salary, or similar types of payments. Similar type of payments to me means ownership draws. That means that $10,000 that you take out as an owner of a company for yourself, I believe it is. And the other thing I want to mention too is, remember, banks, some banks really aren't looking at it, right? They're not looking at what, they're not looking at how you're determining the figures. A lot of them are just saying, okay, if that's what you want to do, then that's what we're going to go with what you say. So, all right. I had okay, sorry, I already got this one through the application without having an account. I applied, okay, I answered that one, dismiss. I didn't hear back from my larger bank on the PPP. Can I also submit to a smaller bank? Be careful about submitting multiple applications. The SBA might not like it. So what I would do first is check with your larger bank and saying, hey, did you get my application? Is it somewhere in there? And if they come back and say, nope, we have no idea where it's at, then you can try to go to a smaller bank. But be careful. If you submit 2 applications, that could be a reason to just deny you outright. You're not supposed to have 2 applications in the process. So be careful with that. I know that's hard. It's difficult because the application window opens Monday and you need to know what's going on with this bank. So really try to find out what's going on with that larger bank application there. What if I'm declined for their reason? Did not supply information request. Can I reapply? Yes, you can definitely reapply as long as you, well, if this is through like PayPal or something, go through the list that I submitted and that should be it. I mean, I'm not sure what else that we can do because I just don't know what the applications are like, but you can always apply until you get the information that's required. So the question here was, if a bank says or lender says, hey, you didn't give us enough information, so we're denying you. Yes, I would think you can reapply. I don't see why not. And provide the information or apply with another lender. Self-employed do not have employees but can get this for their own payroll. If you have payroll, if you are paying yourself a wage, right, even if you're self-employed and you pay yourself a wage like you get a W-2, then you're not considered self-employed for purposes of the PPP. Instead, you would have to apply as if you're a business that has employees. Okay? But if you don't have any payroll whatsoever, you are just taking profit out yourself, then you would be considered self-employed, as long as you're a single owner. Okay. 2-person, take draws. Okay, sorry, I answered that one. So sorry, I missed your question earlier. The best ways to apply through a bank, right? Not necessarily. If you can find a bank that will take your application and run with it, great. But as I think I mentioned earlier that I read that some people were getting PayPal funding within a day of submitting their application. That again was the first round. I have no idea if that's happening now. The other thing I heard too is some banks will favor certain clients. So if you have a good relationship with your banker, you may want to leverage that relationship with that banker. If you are, will I have to prove I'm part of the PPP supplements that income was more than I typically earn? Okay. We actually will get to that question as an example. So sorry, the question is, I read them and I forget to tell you what they are. If you are still working and able to take an ownership draw, but it's reduced due to COVID and the stay-at-home orders, will I have to prove I only use part of the PPP funds that supplements the income? What if it's more than I typically earn? Okay, so I think the question is basically, if you're self-employed, can you use your PPP loan to replace the income that you have lost, the net income you have lost? Yes, and we're gonna get into this example, but the PPP limits the amount of the income that you can, the amount that you can use from your PPP to pay yourself a net income. And we're gonna hit that example and go over that exactly. But again, the PPP just caps the amount that the CARES Act caps the amount of the PPP loan funds you can take as lost profit. Do you have to spend the money within 2.5 months? No, 8 weeks. So that's 2 months. So you have 2 months to spend the money for forgiveness. Okay, you can take as much time as you want, but if you don't spend the money according to the rules of the PPP, which I talked about earlier and in the slide, you will have to repay it back at 1% over 2 years, or just give back the money. So let me look at the chat box here. Okay, so we talked about that. To clarify, an employer cannot be reimbursed for their share of paid Social Security, Medicare. If so, an owner partner is paid by the business they own. Can the taxes owed to that owner? Okay, so that question again is, if you are receiving a W-2 wage, right? If you are receiving an actual paycheck and then you have your Social Security and your Medicare gets taken out of that, then you're considered as a part of the payroll. That's me. I'm just like that. I don't have any employees, so it's just my wife and my spouse and myself, and we draw a wage. Just given the tax election that we have, we draw a wage. So for us, our Social Security and everything gets taken out of our wage portion of our profit, and that is included as part of the payroll cost. Now, okay, maybe if I, the business owner, can the taxes be owed to that partner? Yeah, so in that case there, because of me, so let's say I pay myself $10,000, right? Going back to the example I had, and $8,000 goes into my pocket, $10,000 gross, $8,000 goes into my pocket, $2,000 goes to the IRS, right? For my share of Social Security and Medicare. For purposes of payroll cost, I put down $10,000 and that's what I got, okay? Instead of just $8,000. One bank told me I only need to put down $8,000. I said, forget you. I'm going to go with $10,000 and find another bank. But one thing, Kara, to keep in mind, remember, you do have to pay your own share of the employer taxes. So when I pay myself $10,000 as gross, right? $8,000 goes in my pocket, $2,000 goes to the IRS. I'm paying an additional $1,000 on behalf of my PLLC to the IRS. Right? So it's actually $11,000 that I'm paying. And the PPP is only going to cover me for the $10,000, not that extra $1,000. So, but the other issue is if you're not on payroll whatsoever, then you are on the self-employed. And I just answered that question about what happens when you're self-employed and how you can get a net profit replacement. So, Kara, I don't know if that's your situation or if that answers your question, but if not, let me know. So let us go on back to, let's go back here. All right. So, okay, so these steps here I'm not going to cover right now. When you get the slide, you can go over it. But this is actually how to download your documents. Again, this is for Washington State, but these steps should be somewhat similar to what if you're in California, Chicago, or I'm sorry, Chicago, California, Illinois, or New Jersey or New York. But if you're looking for your corporate documents, your LLC documents here in Washington State, you can follow these 12 steps. I know it looks like a lot. It's just a lot of button clicking. That's all it is. And then, but you can download them, these documents here. Remember, bylaws, operating agreements, those are internal and they're not filed with the state. This last one here is how to get copy, well, not a copy, but proof of a business license with the state of Washington. I'm sure other states outside of Washington have something, similar process to do that. So I'm not going to go over it, but because I want to save time for questions and for examples here. How are we doing on time? Okay, so I know we're going a little over just because I'm taking questions as we go, so we don't wait till the end. So let's do some case studies here. So we have our volunteers, Maylee, Robin, and Steph. So let us go first to, let me do one thing here. Let's see here. Okay. So we have, let me close this out. So we have Maylee. Let me actually make it large so everyone can see. So we have Maylee here. Maylee formed an LLC to operate a restaurant, and then she made an election to tax the LLC as an S corporation. All that means is Maylee is paying herself a wage, right? So she's not just drawing an owner draw. That means she's not just taking net profit, but she actually has a W-2 where she's paying Social Security, FICA, everything. She also has 2 other employees, and everyone is paid less than $100,000. So here are the totals that she has. Employee compensation, including Maylee, $100,000. That's the total compensation, gross wages. The LLC paid insurance premiums of $20,000. This is group health insurance, so paid by the LLC. And then retirement plan contributions, the LLC made $10,000. So let's calculate the LLC's payroll costs. Right, so let's see, which one is this one? So I mentioned earlier, there's this calculator by the Association of International CPAs, which is a spreadsheet. It's a really good calculator. There are 3 tabs right here. If you can see it, there's instructions, PPP loan calculator, calculating payroll costs. I'm not going to go through the instruction sheet right now, but this says if you should, whether you should use this sheet. It also goes through summarizes the guidance. It's probably the best calculator I have seen, and it's done by CPAs in this association I trust, and it's what I use. So what we're going to start with, I'll briefly show you this sheet. We'll come back to it, but this is the one that's actually going to determine how much you're going to put for your average payroll costs. Okay? Let's go first to this sheet, calculating payroll costs. So this is what we're actually going to use to determine your PPP loan amount, right? This goes into that base calculation of your payroll costs. So remember I mentioned you can use 2 periods. You can use 12 months prior to your loan date, right? Or you can use the entire 2019 if you want. Okay? And that's what this is. So it's an or. You use your annual data or your, I don't want to shrink it too much so you guys can see it. So, or you put it in month by month. It's totally up to you. You can always look at it, and you have to pick the time period that best suits you. And before we finish, I'll talk about whether you should, if you get a $20,000 PPP loan, if that's what you should take. Okay, we'll talk about that. All right, so let's fill out what Maylee's LLC's application here. So right here we have gross wages, right? So we know that there were 100,000. Let's assume she chooses the 12 months prior to the application period, and that's what these figures are from. So gross wages, we'd enter in $100,000. And as I mentioned earlier, I am recording this webinar. I recorded the one on Thursday, so I will upload them. I'll put one of them on YouTube, and then you can always come back to this part of the video if you're not sure. Okay? Health insurance, well, there's no self-employment income because they're not general partners. Person who asked that question earlier about if you have 2 owners of a PLLC, and there's no employees, and they just draw a wage, they just take a member draw. Basically, they just take the net income, right? This is where you will be entering your net income, okay? Group health insurance coverage. So that we said is 20,000. And then retirement benefits paid by the LLC, 10,000. So and then we can ignore this for now because none of these apply, and we're going to cover that in the next case study. So the total payroll costs that the LLC had was 130,000. And when that's divided by 12, that's what it says right now. I can't change that. But this $130,000 divided by 12 is $10,833. So that's the average monthly payroll cost. Right? So now we go to the payroll calculator, back to this tab, and it has filled it in for us, right? So that someone asked a question, do you have to spend it within 2.5 months? The reason why that question comes up is in terms of determining your PPP loan amount, you have to take 2.5 times your average payroll cost. So again, you got your total payroll cost. Sorry, I'm going back and forth. But we use this sheet to determine your total payroll cost, which gives us our average payroll cost. Going back to the second sheet, now we determine your loan amount, which is 2.5 times your average payroll cost. And for the LLC here, that is $27,083. So that is the maximum loan amount that the Maylee's LLC can take out. And right here, we don't have to worry about right here. So as far as these facts are concerned, there was nothing taken out for the EIDL at all that Maylee took out, and there was no advance as well too. But the next example will cover that. Okay, and we'll have more questions after. I'll take more questions afterwards, or if you want me to redo any of these examples. One thing. Let's actually go back to what the application would look like here for Maylee. Okay, so this is so Maylee's filled out the form or fill out the loan calculator. Let's put this one over here. Sorry, come on. All right. Oh, you guys can't see that. I can't even see that. All right. So what Maylee would be doing is filling in the name of the LLC, selecting here, even though Maylee has elected to be taxed as an S corporation right here, right? We're going to put in the entity type is an LLC. Okay? I just think that's, at least for me, that's what I did. And then name, address, EIN, TIN. Remember I mentioned that earlier. If you're self-employed, it'll be your social security number, telephone. Okay. So remember we went to that spreadsheet. Sorry, I'm gonna have to go back and forth here because I just can't get both on the screen. We said average monthly payroll, right? So right here, that's 10,833, right? And that's what you would put in here, times 2.5 equals that, oops, too many screens. Equals that $27,083, and that's what it would say. Okay, I'm not going to enter it in here, but that's what it would say. And then number of employees as well too. And in this case here would be 3 employees because Mei Lee is drawing a salary, so she would be considered a third employee. Okay. So that is the that's the PPP. Oh, I wanted to show you what other type of applications exist. So this one is from US Bank, and let me make it bigger here. Okay, so this one came from US Bank, and they're all pretty similar. So this person had eligible costs section, and it doesn't really give you much detail here. And if you just relied on this, you wouldn't know what to put in. It's just saying, you know, there's 3 sections. Your payroll costs, well, payroll cost makes you think it's just payroll, but it's not, remember. It's your retirement accounts, your health insurance, mandatory exclusions, right? Let me compare it to here, back to here, sorry. So what they're saying is that first section 1 is right here, right? Of that US Bank application, they're asking for this. Section 2 includes exclusions, right? And that's right here, the exclusions, okay? And then the page 3, or sorry, section 3 is your payroll costs, which we talked about. So, and for the US Bank one, they want you just to type it in here, right? They're not asking you to submit a loan calculator yet, right? And then periodic total, and you would say, well, what's that, right? And that's that's the 12-month of your payroll costs, right? That's that for Mei Lee, that would be her 10,000, whatever it was. Right? Then source document. Now you have to provide evidence of your payroll costs. So remember I mentioned you have to upload and provide your employment tax returns, and that's what you would have to do here. And then your subtotal, and then I think their app here will actually calculate your payroll costs. The next section, exclusions. Right? I won't go into that, but you would have to type in each exclusion here, source document, and then finally, section 3 here includes your calculation of your payroll costs. Right? So, in my opinion, oh, and then they ask you about the EIDL if you took one out, and then here we go. This is what they tell you your loan cost is. Okay? Well, how much you're getting for your PPP. So, in my opinion, this application is really, as I look at it, it's really difficult to follow, especially if you're just doing it from scratch, right? But if you had this type of a spreadsheet, it would make it a lot easier. So I really recommend that before you start doing these applications, you take care of these spreadsheets first. Let's look at the next case study. We have Robin here. Robin has, let me delete all these here. So Robin has a corporation and has the following payroll costs. Robin makes $150,000. 2 other employees make $50,000 each. Total payroll, gross payroll is $250,000. Here the health insurance, $20,000. Retirement, $10,000, and the corporation took out an EIDL advance of $3,000. So as I remember, I mentioned, you get to take out it's $1,000 for the EIDL advance, $1,000 per employee owner. There are 3 people here total. 1 owner, 2 employees, so $3,000 advance. So I have a poll here about the $150,000 for Robin. If I can, what do I do? There it is. Okay. Let me launch the poll. How much of Robin's $150,000 is excluded? So here's what we have. We have the people who did vote said 50,000 is excluded. Some have said, one person said none, and one person said all of it's excluded. So the correct answer is 50,000. 50,000 is excluded because under the CARES Act, for people who make more than employees who make more than $100,000, you only exclude the amount exceeding $100,000. So in this case here, let me close this window. Right here, $150,000 for Robin, and sorry, yeah, 150,000 Robin's making, and then so 50,000 of Robin's compensation would be excluded for payroll costs. So let's look at the calculator for this for Robin's corporation. As we did before for Maylee's LLC, we enter in the total gross wages, right? And that's 250,000. No self-employment income, right? And group health insurance premiums, 20,000. Retirement benefits, 10,000. Right. Now we have to worry about excluded payroll costs. We skipped it in Maylee's because no one made more than $100,000. As we just did the poll, compensation of an individual or owner over an annual salary of $100,000. So the wording here is kind of tricky because it makes you think, wait a minute, doesn't that mean that anyone who makes over $100,000 is excluded? That's not the case. It's only up to $100,000. So we only enter in here, only 50,000 is excluded. Now, if Max, back here, right here, if Max was also making 150,000, then that would also have to be included in this exclusion amount here too. Okay, but we don't have those facts here. It's just Robin. Okay. So with the exclusion of 50,000, the average payroll costs are 19,167. So let me show you what happens if we don't take out the 50,000. You know, the payroll cost would be $23,000, roughly $23,333 for determine the PPP loan amount. So that's not the case here. So Robin, the corporation's only $19,167. So now we go back to the loan calculator, that second tab. And as we see here, for the corporation, it's $19,167 times 2.5, which gives us a maximum loan amount, at least initially, of $47,917. I have another poll now. Let's see. So let me get it. So here we go, another poll. How does the EIDL impact the corporation's PPP loan amount? So go ahead and start voting. Oh, that's not what I wanted. Well, I was trying to do an egg timer. Couldn't get it, sorry. So go ahead and start voting here. Let's see, give it another 5 seconds. Any guess is good. Increase it. All right, I'm gonna close the poll. All right, so actually, I don't know, hopefully you guys can't see, I am sharing my screen, so maybe I shouldn't be. I don't know if you guys can see the poll, so some of you are just bandwagoning, but hopefully not. But if you are fine, as long as you just kind of get the lesson here. Okay, so the 6 people who voted said it decreases by $3,000, and that is correct. Okay, so as I said earlier, if you get the EIDL advance, remember that's that portion of your EIDL loan you just apply for that you can just get, that's not, you don't have to pay back at all. But if you get, or you don't have to pay it back if you don't get the PPP loan. I should say that. If you get the EIDL advance, you do not have to pay it back as long as you don't get the PPP loan. But if you get the PPP loan as well, right, your EIDL advance will reduce the amount of the applicable loan forgiveness. You can still get $47,000 as a loan, but only $43,000 will be $43,917 will be forgiven. So let's put it into the spreadsheet so you can see it. The corporation has no outstanding loan amount for the EIDL. The corporation just asked for an emergency advance of $3,000 and got it, right? So that's 0, but here, $3,000. So again, as I pointed out right here, the corporation took out an EIDL advance of $3,000. So as you can see here, see how that impacted it. It went from 47,000 to $44,917. So all this means is the corporation will still get a $47,917 loan, PPP loan, but only $44,917 will be eligible for forgiveness. This $3,000 here will have to be paid back 1 year. Oh, I'm sorry, over 1% interest over 2 years. So that's just to give you an idea of what the EIDL looks like and what happens when you have someone has a compensation over 150. So these examples are I think I'm targeting these not for very large businesses that have multitude of employees. It's just to pinpoint some of the principles of what's going on, and maybe some of these will apply for some of you who aren't really large businesses or have lots of employees. All right. So let's go to our last case study here, and that is Steph. Steph is a sole proprietor, works as a personal trainer. He had no employees and the following profit and loss for 2019. Gross receipts. So his clients paid him $140,000, and then he had these expenses: $10,000 for advertising, insurance, office expense, supplies, travel, for a total of $30,000. That means his net income, when you take his gross receipts minus his total expenses, he had $110,000 of net profit. So I have another poll here. If I can get it. So, is Steph's $110,000 fully included as a payroll cost? All right. Hawaii 5-0, if anyone fan. That's the original one, I think, from the original series. All right, so we're going to end the poll. So, wow, this one was pretty close. So 6 of you had said it is not fully included. 3 of you said it's fully included as a payroll cost. So that's correct. It is. I'm sorry. No answer is correct. It is not fully included. So, so let me show you here. We go to the spreadsheet for self-employed. So this is a different spreadsheet. The other one we were looking at was for-profit businesses or even nonprofits as well too. This one is for self-employed individuals. And if you look here, it says a maximum of $100,000. So this is what you're supposed to report. 2019 Schedule C, line 31, maximum of $100,000. That means all, sorry, I entered into the wrong field, $100,000. Okay, let me show you the Schedule C quickly. Right here. So this is a Schedule C for your 2019. And if this was Steph, put Steph's name, whatever social security number, here's the $140,000 in gross receipts, and then all the expenses. And then I want to point out here, line 31, right? This line 31 of $110,000, and that's what this calculator says here. Line 31 from your 2019 Schedule C up to $100,000. So we're only doing this section of the calculator. This section right here is if Steph had employees, but I'm not going to cover that here. That's very similar to what we covered for Maylee and for Robin. Okay. So Steph's payroll, where'd it go? Oh, 12 months, sorry. I forgot to enter in 12 months. So number of months operation in business, 12,000. Okay. So that's 8,333 in average monthly costs. Now we go to the payroll calculator. Steph's loan amount is 2.5 times this amount, which comes down to 20,833. I know we're running short on time here, so I do want to get to the next point. So this is Steph's maximum loan amount, right? This does not mean Steph has to take out 20,833. And let me explain why. The loan forgiveness rules for self-employed, they're a little bit easier to follow. They're not as convoluted or harder to follow than for-profit. I have some links here through the materials. It's the SBA, where you can look at the guidance, the link to the AICPA, and I'm offering free consultations during the COVID-19 crisis. You'll have a link there to my schedule. Other than that,